Hey, what's up, guys? It's Chicago Trader here for, I believe, week 6 of the fundamental analysis series. So, thanks again, as usual, for all the recommendations. So, last week I did kind of a short, quick, what I do in the morning, kind of flip through of a company. So, for my strategy personally, and remember, guys, the disclaimer: this stuff is not investment advice on my part, MIC, or anything else. I'm going to be covering MLNT, and it's been a while since I've had kind of a company come up that interested me in the kind of longer term, big picture, kind of what's going on, kind of play for a swing possibility for myself. Again, not, investment advice, do your own DD. So this one happened to move. It's MLNT, Melinda Therapeutics. So it's kind of what I'm going to try to do on this one is go through a little bit of what I did last week and then kind of try to piece together the whole picture and kind of, how I get more of a holistic view from kind of a top-down approach when it comes to kind of researching these things and whatnot. So let me just jump right into it. So right here, obviously, we have a $1.75 price per share, $100 million market cap. So I'm going to jump right to the most recent 10Q. So actually, before I do that, we'll see here if I'm going to look at the first thing, like I said last week, I'm kind of jumping through here. Looking at the outstanding shares, just a quick glance. So there's 31 million on March 2nd. You punch up to May 2nd, 31 million, so no dilution. Q2, there's a jump. As of August 8th, there's 56. So there's a nice little 24, 25 million share jump there. And then the most recent quarter, we can see that there's 56 million. So there was obviously some dilution that popped in there. If you come back through on the most recent 424B, there was a 22 million share offering at 5. I'm sure there was some over allotment, and that's where your increase in outstanding shares are going to come from. So that, when the thing moved up, I think it was Monday or Tuesday, and its initial PR, that wasn't what interested me. Kind of got to dig it into a little bit more, so let's just get right into it. So the most recent 10Q here, look, I kind of got a cheat sheet up of what I went through last week. We'll go through it real quick. It's cash, 83 million on October 1st, 165 million in assets. So it's nice to see a biotech, not terrible. They have some inventory, some other assets minus cash. I can't remember what off the top of my head I went over last week, but a lot of these biotechs, the only assets they have are cash, but not a lot of debt. Current liabilities 123 million. So after you take the cash burnt, which I'll get into here in a second, it's about even for current liabilities. The net working capital. Scrolling on down, actually have a decent amount of revenue. I mean, for a biotech, 11 million for the quarters. I've seen a lot worse personally. Not uncommon, obviously, the cost of goods sold, the R&D, the SG&A, what they pay themselves, the rent, the commissions, so on and so forth, definitely high. By the time you get all the way down to the bottom, look, they're burning about $10 to $12 million, depending on which number you're going to use per month. So I'm going to use the lower. As you can see, I have it here at about $10 million a month. Net working capital's even. I always do update the cash, right? So the cash that we're looking at in Q3 was as of October 1st. So it's about 47 million as of the beginning of February for using that rate. What else we got here? Yeah, high institutional ownership, about 70% according to FinViz. Obviously, I should probably jump in the most recent Def 14A, but just for simplicity's sake, 70%. You can kind of see the trend of it straight down on the daily chart. But so there we have kind of the just kind of the balance sheet, getting a feel for the company, and then I started looking into some of the other things the company was doing, and I noticed. Let me punch back here. A lot of S3s here, which automatically tells me these are secondaries, right? They wouldn't have this many if it was for primary offerings. So you come through here, yep, you can see the resale. Go to the most recent one, 6.9 million, the resale. And, excuse me, this is the most recent one, resale. So that's where I'm kind of, look, they've done one offering. That was for a primary offering through the 424B. But that's not what caught my attention. Hold on one second here. When I punch back through, there's, they don't put out a lot of 8Ks, and, in the last year they've had 4 or 5. But when I bring these up, so this one was the one that caught my attention. So here's the data here on the side. This is December 19th of 2018. They entered this agreement with VHP for a $75 million purchase agreement. That's where essentially this VHP will buy shares when the company, MLNT, MLNT, tells them to, essentially. So then it comes back here and it says, look, a month later, they enter into a commitment letter for $135 million of a convertible loan facility. And they terminated the original purchase agreement. So it goes from $75 million all the way up to $135 million. I eventually read through it. Matures in 2025, so that's pretty good for the company. I mean, a lot of these will be 2 or 3 years, and it just puts a lot of pressure on the company to perform and raise money. So it's a little bit spread out. It's convertible at 160. So you saw, I've probably done more research and kind of digging on this than most, but everybody was saying, hey, look, they want to get this thing above 160 so that they can convert this. Well, what happens was one of their most recent press releases, you can see, so here's another 8K from just about a month ago or a few weeks ago. So they also issued these guys warrants, 3.7 million, but unfortunately I believe their exercise price is like 16 on it, so it's kind of irrelevant. Here's where it got interesting for me. So they do an amendment on January 14th of 2019, and this is of the $135 million agreement. So you scroll down here, and this is kind of where it got interesting for myself. So for $74 million, they can convert at $103.3, which is the minimum conversion price. And then if you go on, there's other things that, so right here, then, it's 95% of the lesser of the price of the company's common stock, or it's the average VWAP for 3 trading days. So essentially what that means is $1.03 is going to be the lowest that they can convert it at, or it'll be the less of the closing price, or they can use the VWAP, which is on a 3-day average. So if I pull up a chart here, you can kind of see, look at the volume, and since this kind of update came out, it's it's been trading 5-6 million shares, to where you see back here it's doing $300,000, $400,000, $500,000 and just slowly dumping. So when I come back here to the most recent 10Q, and obviously this has got me interested, and I'm kind of going through it. There were some covenants that caught my attention. So a covenant, if you don't know, is kind of a legal binding agreement. Look, if I'm going to give you debt, there are certain things that you have to do. Otherwise, I can recall the debt, right? So, this is on the 10Q. And so on the for the Deerfield facility, it provides up to $50 million in additional capital. And if we scroll ahead here a little bit, in addition, there are certain financial related covenants under our facility, including, so they must file a 10K for the year. So, hopefully they can get their 10K in on time without a problem. They must maintain a minimum cash balance of $25 million at all times. So this is right here is where I become a little bit more interested. And they must achieve net revenue product sales of at least $45 million and $75 million, respectively, for 2018 and 2019. So if you keep reading onto it, here I'll just cheat. I posted this one on Twitter. Recent sales trends combined with our current projections are likely to limit the ability to draw on the additional $50 million. So they're basically saying that they don't think they're going to be able to hit the covenants, and it's probably geared towards the sales covenant, right? They're going to be able to file the 10K. They'll be able to hold the cash because they have enough cash for it for a while. But that's where it was kind of funny to me on the most recent one. So on the, what was it? Yeah, the 4th, they come out with this corporate update, and that the new CEO that just got appointed wants to save all this money, you know, $50 to $70 million a year. You can see it down here, you know, as we kind of covered in the SG&A and those expenses. He wants to save 50 to 70 million. But it's kind of convenient. Maybe I'm just a little bit cynical that he says that they're going to be doing $46 million in sales, even though right here in the 10Q, which was just a few months ago, you know, they basically say that they're kind of doubting on hitting that covenant, the 45 million. So, you know, like I said, this is kind of where I become interested. I did make a mistake of, so in the most recent 10Q, which one was it? Oh, not the 10Q. So where they did the amendment and it says the $3 was a conversion. That's what got me extremely interested. And I have traded this on and off, but I did make a mistake. These are unregistered, right? So they can't convert these until they file an S3 or registration statement. So what I'm thinking is going to happen is, look, they're eventually going to have to do this, right? Because the company is going to be, so on 4/1, this is why it's highlighted here, there's a $25 million that they have to have minimum, right? That's part of the loan. If they go under it, you know, they can force the payment, they can stop giving them money. So that's coming up sooner than later. So then I kind of thought it was convenient as well. If you look, so again, the CEO was just appointed on, I believe it was February 1st. Hang in here for a second with me. Yeah, so they basically give the guy, obviously, so they grant him up to 300,000 shares of stock, and the exercise price is equal to the closing price of MLNT's common stock on February 1st. And they've also granted restricted stock units of 200,000 for the CEO. 25% of the stock that they've given him becomes vested on a 1-year anniversary. So it'd be 2020 of February 1st. But notice the part where the closing price of the stock on February 1st is where he gets his exercise price. So 84 cents he gets these to convert these at in a year. And then the first day he is CEO, sorry, he got appointed on a Friday, it looks like. And then on the 4th was when they put out that PR that he's going to try to save him money, restructuring costs, you know, and the stock shoots up. So now you have a CEO. So to kind of paint a clearer picture, I know I've kind of been all over the place here. You have these guys that have a ton of debt that needs to be converted, about $75 million. And if you remember the GVO and HMNY, anytime, you know, from the examples I've studied and kind of looked over, that there's $75 million, you got a $100 million company, it's a lot of overhead once it's registered, right? So once these become registered and are able to be converted, you know, again, it's at $3 or the VWAP or the, you know, most recent price, it is going to absolutely kill the stock most likely when it does. But again, there's no registration statement. So that's just kind of my opinion for me on it. And see what else we got here if I missed something. There's quite a bit that I looked into this. So if we go to the 10Q also, so another thing with convertibles, it's such a good deal for the debt holders for the most part because look, they have these restrictive covenants that are, you know, not 100% going to ensure that they're repaid, but man, they are giving these companies basically, you know, it's their last kind of source of revenue or way to raise money. So they know it's extremely risky to give these guys money when you're a biotech, you're burning through cash. So they want to be able to get paid back. So if, say that they don't file a registration statement and they don't convert this into stock. So remember, it's convertible debt because it can be acting as debt, it can be transferred to stock. So if it doesn't, what happens? What if they don't convert this? Well, again, I'm on the most recent 10Q here. The debt is now, they're paying 11.75% on interest on this. And then if they draw anymore, if they draw on the 50 million, which is additional, it's 14.75%. So, I mean, if I'm a debt holder, I am either going to collect 11.75, maybe up to almost 15%, or I can convert it. So it's just got to be if whatever makes the most sense. So again, convertible debt's a little bit, it's kind of a two-edged sword. You got to figure out from the incentive, like if I'm holding this debt, at what point do I want to convert it? And it's getting very close to it, in my opinion. Again, you can feel free to disagree, do your own kind of research on it. But, I'm going to be watching the stock pretty closely. I've kind of went through this 10Q. I'm going to go through it again. These are lengthy. I mean, obviously, there's probably some other things that I skipped and, probably missed even. So I'm going to be doing some digging on it. But definitely going to be interested in the stock and see, especially if that registration statement comes out in the next month or two to where they can convert this. It wouldn't surprise me. But, I hope you guys enjoyed this. Again, sorry I was all over the place. Kind of did this last minute. Kind of just something I've been digging into this week and figured I would share. As always, feel free to reach out. If you find something, obviously let me know. If you want to have a conversation, I'll be doing calls this week. So hope you guys have a nice weekend. We'll see you in chat Monday, and take care.